Welcome to another day where we hear the dreaded good afternoon. Something different about today is that while we get the interest rate decision today, which we'll talk about here in just a second, we do not get a summary of the economic projections because we already got that last month. I guess they just don't, change their minds that quickly. So we don't have that to analyze as far as where if they've changed their minds as far as the projections for rate cuts goes, or any of the other economic data like core PCE, GDP, etc., what the Board of Governors thinks. What they're going to be really focusing on today is, yes, the interest rate decision. We pretty much all know that the interest rate decision is going to be nothing's going to happen. In fact, if I pull up CME Group's estimate, which uses futures to futures on the basically that are on the interest rates, you can see here that we have a 99.5% chance that we stay within our range of 425 to 450 basis points, and a 0.5% chance of a rate cut. Now, if we got a surprise rate cut, the markets would be elated, right? Because when you have a rate cut, it's going to stimulate the economy. It's going to make money cheaper. It's going to make borrowing cheaper. It's going to make debt loads less heavy, and that is good for companies. It's good for consumers, et cetera, et cetera. The stock market would be happy, probably. Of course, it could also stimulate. Inflation. And if we take a look at inflation, I have kind of a layout of the economic situation here. So at the top, we have the Qs. Then we have the unemployment rate. We have core CPI, and that is the main measure that the Federal Reserve uses to, I'm doing well, thanks for asking. Officially, the rate decision will be unveiled here in 25 minutes. So it's at 2 p.m. Eastern time. I'm in Mountain time, so that'd be 12 p.m. Core CPI gets rid of energy, goodbye. Food, goodbye. Way too volatile. I mean, if you think about it, the avian flu came in and just, shot egg prices through the roof. So, they throw that out the window and let it fall 10 stories down on their faces. And instead, they keep everything else. And so that's core CPI. That's the measure that the Fed really uses. And you can see it's come down significantly from where it was. I can't even see where it was at, but it was above 6%. It's at 2.4%, which is much closer to their goal of 2%. Now, to get to their goal of 2%, they have to kind of be in this wait and see approach, right? They have to keep rates at an elevated level to keep pressure down on inflation. They want borrowing costs to be higher. That's why if you go to get a mortgage, which are more based on the 10-year treasuries, but if you go get a mortgage, it's going to be something like 7%, or a HELOC is going to be like 7%, or personal loans are going to be more expensive. Maybe even credit card interest rates will be a little bit more elevated. It's all to keep consumer spending down so that there's going to be this pressure on inflation because there's going to be lack of demand for goods and services. So there's that. And then we have unemployment, which has actually cooled off a little bit. It's risen, and then it's kind of stayed steady, and it's, the last numbers show that it's been cooling off a little bit. And by cooling off, I mean that the unemployment rate, the unemployment situation, labor market situation is a little bit healthier in the sense that, for two reasons. One, people are finding jobs, and they're staying at those jobs for longer. That's what cooling means. And two, this increase that we've seen over the past, I don't even know, since June of 2023, it's gone up since June of 2023. That's good for inflation because we want some level of unemployment to keep inflation down. So Jerome Powell wants there to be some level of softening in the jobs market in order to keep pressure down on inflation. So their main target is inflation. Now, the risk is if they keep interest rates elevated, which here at the bottom you can see the Fed funds rate. If they keep this interest rate elevated for too long, you might see core CPI go down, which they're hoping to reach their 2% goal in the long run. But then you might see unemployment spike up. And what do you have to do if unemployment spikes up? Well, you have to decrease the interest rates aggressively, and that could cause an increase in inflation. and then you're in a mess where all of a sudden you have an unemployment that's high and coming down, but inflation going up, and what do you do? So it kind of puts them in a little bit of a tricky situation. And I think what they're going to be really focusing on, I don't know why the Fed fund rates text just disappeared. Let me add that really quick. Fed funds, I'll just add that. They're going to be really focusing on, like, okay, so at the last FOMC meeting, Jerome Powell, a beautiful man, who has everybody by the balls, he was saying that he is not going to. People asked him, like, what about Trump's policies, right? They all anticipate tariffs and stuff. We dealt with trade restrictions when Trump was president last time, and it rocked the markets quite a bit, multiple times. It was still a bullish market, but it still caused some tumultuousness. And so what they were asking him is, like, what are you going to do about President Trump's policies when he comes into the new administration? And they took a data-driven approach, right? They're like, well, we'll do whatever the data tells us to do. We'll take whatever the economic data points us to do. We're not going to try to predict what the new administration is going to put into place policy-wise and try to cut rates based on any forecasts of that. That's not what they look at, right? But today, that's what people are going to be really asking, because, you know, President Trump has, you know, announced the fact that he basically wants meet Kevin Knowing, I agree. Also, his ETF is eating shit. I'm outperforming him like crazy. By the way, if you want to follow my trades, like link your brokerage to my portfolio, you can do so in the description below and read the disclosures as well. But it literally will do my trades in your portfolio real time if you select the active trading, actively managed portfolio under my name. I'm on their app. It's super awesome. So this time around, there's gonna be a lot of questions of, like, what is Trump? What are his policies going to indicate as far as inflation goes in the future? Because Trump has said that he wants to basically abolish income tax and replace it with taxing, you know, other countries via tariffs. And generally with tariffs, what happens is when you tax other countries, they're just going to pass that increased cost along to consumers, which could increase inflation. And so then there's a concern of, well, do we need to keep interest rates higher for longer? Do we need to increase interest rates? And they're going to do that in a data-dependent way when the tariffs become more evident. I think he'll probably mention that they don't know what the tariffs are exactly yet, who's being tariffed, who's going to counter tariff, and all that kind of stuff. But there are going to be questions from the press who are going to ask about the policies that Trump is implementing that could be inflationary, because it's going to make it a tough situation. If there's inflationary policies that are put into place, it can do that thing where it pushes core CPI up, and then you're in a sticky situation where you want to raise interest rates, but then that's going to shoot unemployment up, and now you have both core CPI and unemployment. Oh, Fed funds rate. I got it backwards. This is Fed funds. This is unemployment. Where unemployment shoots up and CPI shoots up, and then the Fed is in a really tough position. Like, what do they do? And that's part and parcel of the Federal Reserve, is that they have it's the very blunt tools that they're working with. Let me look at what you're saying. Can you comment on the trend of gold prices? Not really. I mean, gold is just a commodity where it's a safe haven place. It's a place to put. It's like Bitcoin, but less volatile. Like, eventually Bitcoin will be like gold. It'll suck up people from gold, because it's just a place to store your money and as a safe haven, I guess that's how to describe that. Tumult. Okay. Fed decides on the numbers. To me, Kevin comes off as an extreme narcissist. Yeah, he wears a suit and that flowery thing because he is marketing. That's what he's doing. Because you know what I do is I see that and then go, I'm going to send this to my brother. Look how fucking stupid he looks. And there you got another view. So he does those things just to get views. It's annoying. It's really annoying. How do did an ad just pop up? I don't even know how that happens. Okay. Just me, or is he super quiet? If I'm super quiet, let me know. I can talk closer to the microphone, or I can turn myself up. Would you buy Nvidia at the current price for a long-term hold? If you're for the long term, yeah, because Nvidia is going to go up over the long term. But I'm holding off a little bit. I would like to see it hit $100 first, because I sold Nvidia. I made a huge return on Nvidia, and I sold, and it kept going up. And I'm waiting for it to drop down to maybe $100, and then I'll start buying again. And if it keeps dropping lower, I'll definitely reallocate my portfolio to be more into Nvidia. I'm into AMD right now, but I would like to diversify into Nvidia. But I would like it to do it at a more fair price. And like I said on Twitter, I said the AI bubble has been popped by DeepSeek. It's just a bunch of quantitative traders who did the side project with $6 million and did something that OpenAI did for hundreds of millions of dollars, and so that rattled the entire market. And the Magnificent Seven is being driven by AI. It goes to show how much the hype of the Magnificent Seven, Microsoft, Apple, Nvidia, etc., was driven by AI hype, and the whole market starts correcting when some group of nerds over in China develop an AI that can test with ChatGPT-o1, and they did it for a fraction, pennies on the dollar. So that it, anyway, I lost my train of thought. What do I think of Palantir? It's funny because their ratios are all skewed. Like their PE ratio is like 700, whatever. Their price sales ratio is like super high. But the thing about PE ratios is that even when they're big, people might say that's bad because their price is high compared to their earnings. But if their earnings starts rising really aggressively, that can compress their PE ratio. And so when a PE ratio is high, it's not always a bad thing. But if I look at it just from a PE ratio, from a fundamental perspective and from a technical standpoint, it looks overbought. But like I said that like over a month ago, and it's made great returns since. So like the stock doesn't give a shit about what you think. It can be the ratios can be all over the place. Who cares? It's all about supply and demand. Do people want the stock or not? So do I think Palantir is probably a good hold for the long term? Yeah, but like you got to be a little bit careful when the PE ratio is like 700. I mean, maybe we can pull it up here on TradingView really quick, and I'll answer that donation. Thank you for the $5. Give me a second here. Let me look at the Palantir here. So on TradingView, you can go to financials, and maybe you can see the PE ratio here somewhere. So you can see their net income is rising. It went from negative actually to positive in 2023, and then we go to quarters of 2023 to 2024. It's still positive, right? You can see the revenues increasing over time, earnings increasing over time. The debt level is about the same, but it has still high cash equivalents. I don't know where the PE ratio is. Let me just see Palantir PE ratio. 401. See, that's crazy to have a 401 P ratio. The one and only. This is nothing compared to all the knowledge I've gained from watching your videos. Do these more often, please. Thanks a bunch, dude. I appreciate that. Thanks for the $5. I appreciate that a lot. Copilot is going to cost Microsoft a lot of customers, for real. Copilot is awesome, dude. It's like GK, who is grossly underperforming, Ross Gerber. I don't know if you know him. He's like on the news from time to time. But like his 1 year return is 17%. He's underperforming SPY, whose 1 year return is 22%. But his PE ratio or his expense ratio, which is how much he paid to own the ETF, is like 1.68%. So he's underperforming the most basic ETF you can buy, SPY, and he's charging you 1.68% to do so. It's just ridiculous. Message retracted. He must have said the N-word. No chance of a cut. Everything Trump is doing is inflationary. However, Trump will pressure him to lower rates like he did last presidency. This set the path to high inflation. Well, I agree with that to some extent. I do think that, at least from what Jerome Powell is saying, I should stop sitting on my leg because it's going numb, unless I want to say something inappropriate. he doesn't bend to the will of the president, I don't think. It's Congress that can have more of an influence. But of course, President Trump is going to be pushing for rate cuts because that'll make him popular, because the stock market goes up, the economy looks good, but it may not be healthy for the economy overall, right? Because we might push unemployment up or inflation up, which would put us in a dire mess. Palantir too high. Like I feel the same way about Palantir. I'm not gonna give like stock picks advice. Like, don't come chloroform me and stab me in the neck. Like, but as far as like Palantir, like, let's pull it up. Let's pull up Palantir, shall we? I'll do it. PLTR on the daily chart. Look at that. It has a 400 PE ratio, and it's just gone net income positive. And look how much it's gone up. What's Palantir's market cap? 180 billion. That's quite large for a company that's just gone net income positive. Eagles or Chiefs? Thanks for the $5. I wish I had an answer. I'm not a sports guy, dude. I don't get. Sometimes like I'll watch golf and I'll be like, this is relaxing. But like, I don't know, dude. I don't know. Can you even call it? I don't know. Eagles, I guess. Let's pick one. How's your Robinhood portfolio holding up? It's holding up actually really well. If you want to give me a second, I can actually pull up my Robinhood portfolio so I can incentivize you guys to link your brokerage's accounts to mine. So give me just a second here. Again, you can find that in the description. It's Autopilot. Read the disclosures down below. And you can literally, like, as soon as I make a trade, as soon as I update it, it'll update on your portfolio. Okay, so I have my phone mirrored to my computer, and I'll pull up my Robinhood portfolio. I'm still rebuilding after being ill, but here you can see my Robinhood portfolio, my Roth. I have nothing in my individual account currently because of how much, I had that brain rotting disease thing, very casual. No big deal. So I've blown a lot of money in that. So I'm mostly saving up right now, and then I'll start building into my individual account. But really, I want to put whatever money I have into my Roth anyway. But you can see I'm up all time 172%. This is from November of 2022. So if I go to my 1 year, I'm up 55%, which is beating SPY, QQQ, GK, Kevin's PP. Oh, that tasted gross coming out of my mouth. But yeah, so consider like the things I do here minus options. But if I scroll down, my options aren't doing so great. While if I scroll down further, my stocks are all in the green by large percentage amounts. So it doesn't do options, but it does do Autopilot does do stocks, and you don't have to do your whole portfolio. Like, you can still do your own options thing. But it allows you to immediately, when I make an adjustment to the portfolio, it'll make a trade in your portfolio, which is really cool. I gotta catch up. Turn up your mic, bro. Okay. I'll turn up my mic. Hopefully I don't unplug anything. Okay, I turned up my mic. Let me know if that's too loud or if it's an okay level. Tesla going up after hours. Nice. You should be counting if you're investing in blah, blah, blah. Was going to ask the same thing about the screen sharing. Tesla's dropping. PP. Go all in XRP. XRP. Tell me more about XRP. I've never been a crypto guy, but I have to admit, like, I must be wrong because Bitcoin keeps going up, and my brother's really into XRP, and actually bought a little bit of Bitcoin, but I've been in the markets forever, and I always thought crypto was just dumb as hell, but I just gotta be wrong. So maybe it goes up on, I'm gonna read here. Is PP just bonds what is ATP, or do you mean ATM? At that price? Whenever rates dropping again, that's gonna be the real question. It's like, what's the plan here when we hit the Fed press conference? Is like, when the hell are we cutting rates? But if we look here at futures, we can kind of get like some idea of when we're cutting rates. Let me get rid of this. Can I stop it? Stop. Okay. Let's close it. So you can move forward in time to like March, and you can see that there's still the 71% chance of no rate cut, but an increased chance of a rate cut. You go to May, it starts getting more diversified into whether or not we'll get a bigger rate cut or not. Then June, July, September, all the way to the end of the year, where we're hitting more of a normal distribution as far as rate cuts go. And this is probably reflecting partially from the SCP's summary of economic projections, but it gives you some idea where a rate cut could happen. So there's a potential for a rate cut in March, and that's what people are going to be asking is like, are we going to get a rate cut? What about Trump's inflationary pressures? Like what is in the future for the markets? That's what the press is going to be really interested in looking at. Yeah. Where do you and your brother disagree on stocks? I actually helped my brother and set up his portfolio. I think I actually threw them all into QQQM because I didn't want to be in trouble if I made him lose money because he'd be mad at me. But I think I actually might have him sign up through Autopilot, like you guys can down below in the description, and then he can just do whatever I'm doing, so he doesn't have to worry about it. I think quantum computing is overbought. I have no opinion on that. Where do you... No rate cuts equals calls? No. Do you like using Robinhood? Yes, for the most part. It's fine for what I do because I do leaps in the wheel and stocks, right? So there's nothing like super intense. Like it makes me nervous that they're rolling out futures because futures, you have to be really active and really on the ball. Like you can't, the fact that you can trade it from your phone is like freaks me out because I've traded futures on Trade-Evate and like done okay, like, but big swings, but like done okay, like turned $1,000 into $1,200 and then I was like, I'm done because I went down to like 400 and back up. I was like, no, thanks. I did futures trading back in 2019. I ate shit. And doing it on your phone is like, oh my God, like you have to be on the ball. It is scary as hell that you can literally do it on your phone. And so I am very nervous for the people who have no idea what futures are and who are going to get kicked in the teeth as soon as they try futures on Robinhood. It's going to freak me out. I don't think the rate cuts are of a massive concern, but X is speculating that this will definitely be a hawkish stance. It probably will be a hawkish stance. And people won't like that. If you guys don't know what XRP is, you have no clue of finances. Crypto is a whole different category. It's not even like if you go get a finance degree or a PhD, they're not going to talk about crypto. So shut up. Crypto is not. The finance and crypto are not exactly one and the same. That's a dumb thing to say. Sorry, it's stupid. Is Trade-Evate good for beginners? Yes, it's a good platform for trading futures. It requires very minimal margin to put up front to have quite a bit of leverage. So you have to be very, very careful. Trade the mini contracts, the mini like NQ or whatever. You have to go to the CME Group's website and look up what the minis are. I forget what it's / something, and it'll have an expiration date. But you want to be really careful because they're very highly, highly leveraged, and you can really eat shit. But they don't have time decay. So like for big portfolios, if you wanted to swap it out for leaps, like that could be beneficial. But you will get margin called a lot, so you have to continually like you put up an initial margin, right? $500, get a ton of leverage. It goes up, great, you make money. It goes down below that initial margin. And hits what's called maintenance margin, you have to deposit money to bring it back up to its initial margin to keep trading. So you have to liquidate other positions or deposit cash. So you will constantly be getting margin called if it goes down, if you're long any of the contracts. And so even if you were to put it in place of like leaps, for example, you would still have to be there and ready to replace the money to keep the margin at the maintenance or initial margin amount. AMD calls. I have AMDs. I have an AMD Leap that like expires in a year and a half, so I'm not even concerned about it. I have some AMD stock. Thoughts on technical analysis? It is a legitimate thing. Believe it or not, people say it's horoscopes for men or whatever. It's legitimate. It's harder now than it was like back in the day because like in the 2000s because there's just so many people that are crowding the markets. It's harder to find discrepancies in the price and where the price should be. But even Michael Burry admitted that technical analysis was a legitimate thing, and it is. I've used it to get better entry points, and that's what I use it mostly for. If I ever use it, is I use it sometimes for swing trades, but I usually don't even set a stop loss for swing trades. But I use it for price improvements. Like if it looks like if the formation, whatever, looks like the stock price is going to go down, I'll set the limit order for cheaper so that I get a cheaper call option, right? I've never used any AI tools or programs, so I have no idea. Although on Autopilot, the Chat GPT portfolio is doing quite well. I wouldn't trust Robinhood to trade futures, Brandon says, not when they are too willing to close out a trade early. I don't think they'll close out they'll liquidate you pretty fast if you get margin called, so that's true. And if you're going to trade futures, you might as well do Trade Evade and sit at your computer and trade futures, right? Thank you, Prayer Kid. It's MNQ, MES, MYM. Those are the mini futures contracts, so they'll have less leverage. They'll still be leveraged, but I think it's like $12.50 a tick versus like $50 a tick. They go by ticks, literal ticks in the candlestick. So yeah, I love that you mentioned the wheel. Thanks to you, the one and only says. I do it quite often. I'm doing it right now too. Instead of buying 100 shares of your favorite company, sell put on it, and if assigned, now you own the stock if you wanted in the one of two, whatever. But yeah, it's great. I love the wheel. It's awesome. 5-second charts for futures. Holy shit, that's a small time frame. Thoughts on Polymarket for DD research? Don't have any thoughts on that. Burry isn't the holy grail. He said sell in 2023. Yep. I posted a tweet where he said sell, and then immediately after it went up like a ton. And ever since, it's up like, I don't know, the market's up like 50% ever since he said sell. That guy's borderline the R word. But he got right in 2008, and he's trying to ride that high forever. But he was very popular in forums when they were doing in value investing forums, and because of his profitability. He's very profitable. It was easier back there to find, back in his day, to find stocks that were below their intrinsic value. Now people find them all the time and push the price up because there's so many retail traders that are involved, because it's so easy to get involved in retail investing. But he was actually profitable, and someone took him under his wing and helped him start his own hedge fund. And so he, in my opinion, back in the day, he was a lot more of a chill dude than he is now. Now he's like, I don't know if he's done too much LSD, too much Molly. He's got kind of that E-rotted brain. I'm not sure, but he definitely is a little bit, he blocked me, which was actually an honor. But his DD is not exactly the best. He says buy and hold is pretty much stupid because there's going to be long periods of stagnation in the stock market, which is true. There can be, but that's why you implement things like running the wheel. What's his, I don't even know what his fund is up over the past year. Let me look it up really quick. What is it? Scion return. 1 year. Let's see if we can find it. His 1 year performance was 9.62%. 3 year performance is minus 20%. 5 year performance is 170%, which is what I made in 2 years. His 10 years performance is 215%. So ever since, basically, since the financial crisis, he's been trash. Let's see what the markets are doing. Ooh. Let's pull up QQQ here. Oh, are we missing the... Oh, shitters. I'm sorry. We missed the interest rate decision. So I got distracted. Let's see what we got here. Yeah, okay. As expected. So on TradingView, when you go down here to the calendar, it'll show you everything. Usually it would show you like the FOMC summary of economic projections. So you go to their site and see that, but they're not doing that this time. So we just have the Fed interest rate decision and the Fed press conference. And the fact that the Qs is not having a happy time is actually kind of funny, because it was pretty much expected to not have, to stay at 4.5%. So actual is 4.5%, forecast was 4.5%, prior is 4.5%. Nothing, no surprise there. So any surprises will come in the Fed press conference. Would you advise others to do, this is Nahar, I hope I say that right, advise others to do their CFA if they're still trying to become an analyst? Yes. I mean, it's literally a chartered financial analyst. So yes, I would do it. That was actually something I was interested in some time, but I was not the best student. And then I got really into finance after I got my finance degree, and have poured all my time into this kind of stuff. And so I never have gotten my CFA, but that's something I'm looking into, like a CFA or CFP, or getting more education in finance, like getting a master's degree or something like that. Because I feel like I have mastered everything that I know, but there's things I just don't know that I'm missing out on, So I wanted to get more into education. I feel like I have a big brain that's just empty. How's that? I need to fill it with more. And when when it's just me in my head and whatever, the sources I'm so used to, it's kind of the same stuff over and over. Review for a Robinhood Legend platform, maybe a tutorial. Yeah, I mean, it's pretty basic. You can't even roll positions. You can't add alerts on there. You can't see profit loss for the trade that you have open. So it's basic. It does the job. Like the options chain is great. You can see pretty great, at least. You can see pretty much everything in the options chain. But it's still pretty basic. And there's no historical implied volatility or really any implied volatility metrics or studies that you can use to any great effect. Molly, this says, him and his put XRP on monthly candles. All right, we'll do that. Holy shit, XRP is eating shit right now. What is that? Let's see. Where is it? Info line. XRP is down. Oh, it's only 2.65%. But that's in the last 5, 10, 15, 20, 30 minutes. And we'll go to we'll do a monthly chart. There she is. A straight line up. That's never ended poorly. Has it? Any news on Robinhood futures? Yes, they are starting to roll it out. I tweeted out today. I said, let me pull it up here. I said, Robinhood said that they're rolling out their futures. I said, Lord have mercy on those unaware of what this will do to their portfolio. What are your favorite Leaps trades right now? I don't know exactly, because I have AMD Leaps, I have Microsoft Leaps, I had QQQ Leaps, which I closed out of because I thought I legally had to be part of Autopilot, but I actually didn't have to. But I made a 22% return on the QQQ Leap. My AMD Leap is eating shit at minus 50%, and my Microsoft Leap is also eating shit. But that's the thing with Leaps, is like they're highly leveraged. Like you're going to, that's why, and I have a hard time doing this, but that's why you should really just set a limit order lower than when you're going to get in, because it's always going to go down 20, 30%. So just set a lower limit order, right? Don't just get in. I have a hard time doing that. But with Leap options, you're not going to time the perfect bottom. You might as well go down a penny, like just get $1 of price improvement. And there's no way you time the perfect bottom of a Leap option. It's like impossible. Do some level of price improvement and set good till canceled, right? Bitcoin, there is no second best. My man is trying to shill. I am just trying to shill. That's part of my job is literally shilling. I mean, Autopilot. You saw my return on Robinhood. It's like 170%. Do you want to do that, or do you want to sign up for Meet Kevin's PP ETF with like a 16% 1 year return or whatever? You pick. You decide. Hims Leap still no. I don't have Hims Leaps, but I'm up like 70-something% on their stock. Another mistake I made. So I was going to do Leaps on Robinhood, and I was going to do Leaps on Hims. Got a little bit spooked out of both of those. And I made great stock returns, but I would have made really good returns on some call options. So a little bit of a regret there. I do like just doing Leaps on more stable long-term companies that That's just my preference. Because when you do something more volatile or risky like HIMS or Hood, it just adds more stress to it because you don't know if you can keep feeding the fire when you get close to expiration and it's losing, if you should keep buying a new one and replacing it and keeping the trade alive. Short the PPA. There should be an inverse PP ETF, actually. Oh, you're not talking about me. Okay. Oh, okay. I thought my brother was dead. He was at a massage. I was like, where the fuck are you? You've been gone for ages. He's like, this truck's gone. The dog's just sitting here. He's like, not responding to my messages. Got to go to work. See you later, Dr. Dark. Nvidia feels like it wasn't going to go to that 90s. I'm going to check Nvidia here to see what they're doing right now. Okay, not doing super great. What if I pull... Nvidia's down 6% on the day. Someone made fun of me when I said the AI bubble popped right here, and of course it has a dead cat bounce and is down 6%. So it's trading at 121. I would like to see it trade lower than that, preferably. I'd like it to hit here, right here. That's where I'd like it to go. That'd be where I would get in. And then if it went down lower, I'd keep adding to it. Yep. What's the rate at now? I don't know what you mean by that. I'm doing great on Amazon, Google Leaps, thanks to all your info. Thanks, dude. Good job. CC stars. Mister, what do you think about nuclear stocks and the supposedly big need for new energy? Are all the data centers? I don't know. I haven't actually looked into that. But, you know, there's a big stigma around nuclear energy, right? Even though it's one of the safest... Well, I mean, if you've seen the Chernobyl series, you might have second thoughts about that. But it is one of the safest and obviously the most renewable energy source that is there. But the stigma behind it because of what happened in, I think there's one caused by a tsunami. There's a meltdown caused by a tsunami in Japan, I think. That was actually worse than Chernobyl. So there's a big stigma around it. So that's something to get over. That's a hurdle to get over. Papa Powell is probably going to make people unhappy. That would be my guess. But at best, we'll stay neutral. We'll see. We've already had the markets rattled by the DeepSeek being launched by those guys who are doing who are getting into quantitative trading and somehow with like $6 million made something that's as good as Open ChatGPT 01. It's been rattled by that, and then if we have this and it rattles the market, like we could see a nice little pullback. I have no thoughts on ASML. I have thoughts on ASMR, especially if it's a nice girl voice. Dude, oh my god. I'm looking at the decibel levels. It looks pretty loud. Put your computer volume up. I'm at -5 decibels. That is the appropriate volume. Glad to see you're back. Thanks, Admiral. Oh yeah, that's what it is. Fukushima power plant. Thank you, Eduardo. I wasn't aware of that actually until recently, and yeah. DeepSeek is deep fake. I don't eat food because someone choked twice before anti-nuke. Yeah, you are ASMR. Thanks. Sounds fun. Has anyone verified that DeepSeek does what China says it can do? I won't talk about Tiananmen Square, that's for sure. And also, I don't feel it's kind of freaks me out that people are giving their data to China willy-nilly. That gives me kind of the heebie-jeebies. China having your data, not the best. Okay. So we have the Fed press conference coming up here in 28 minutes. The Qs are down 0.62%. Nvidia's down 6.9%. I would love to see it eat shit. In fact, I'd love to see the whole market die. Sorry. So that I could leverage myself or buy the dip a little bit. That would be great. Yeah, but for today, so for March, we have a higher chance of an interest rate cut, but there's still even a higher chance for the interest rates staying the same. So people are going to be really curious about the projections of where interest rates are headed. Yeah. Yeah, when people were asking me about doing Nvidia leaps, I was like, I cannot give you direct advice. I can tell you about their liquidity. I can tell you about their implied volatility, etc. But when I see something go straight vertical, I don't like it. It's called going parabolic. What's Nvidia's PE ratio? Now, it's actually probably pretty small, I bet. And it's kind of inflated at 50.76, but that's not like unbelievably inflated, but that is inflated. Depends on the earnings projections. If the PE ratio will shrink. How does the AMD chart look? Let's take a look at AMD. So Nvidia's down like 6.22%. AMD's down, or it's up 2.34%. Suck it, Nvidia. Come on, give me a nice huge bounce off of here. Come on. Pretty please. I've been waiting forever. I still have a leap that expires like right here. So I have plenty of time for that to have a bounce, and I'll refeed the fire if I have to and buy a new leap option to keep the trade going. But I have plenty of time for that bounce, and that's why I buy deep in the money with a far out expiration to keep break even nice and low so that it's more like this, right? Instead of something like an out of the money option that's like that, right? I like keeping the break even nice and low, and having a long out expiration, because if you did a short out term expiration out of the money, you know, it might look something like this. Of course, it exponentially decays when you get closer to expiration, but I want all the time possible and the lowest break even possible. Incoming shill again. If you want to link your brokerage account to basically my portfolio and have it automatically trade for you, you can sign up for Autopilot down below in the description. Read the disclosures, and you can select my my bread and butter portfolio. It's called Actively Managed. There's also a panic button in there. If you guys are scared of the Fed press conference coming up here in 15 minutes, there's a panic button you can select, and it will swap everything out for short inverse SPY and inverse SQQQ, and inverse Qs, triple inverse Qs. So if we suddenly tank, you'll make a shit ton of money. But that is a very risky investment, because if it doesn't tank, or if it goes up, you will lose money. And I would not hold that for the long term because of Contango. New Meet Kevin scam video. I don't track Meet Kevin anymore. I did my whole Meet Kevin thing where I shat on him. I told him he was stupid. I hate his ETF. He calls it PP. What is he, a baby? Andre Dick's playing with Pokemon cards. He went from dividends to not dividends to dividends to not dividends to back to dividends again. I've done my poo-pooing on people. When a new person comes along, check my Twitter feed, because I'll poo-poo on them. Like Bravos Research, that's someone new I'll poo-poo on. Because they will talk about how the market's going to crash. I mean, if you look, let's pull it up, dude. Let's pull it up. Bravos Research. Fucking clowns. They're just sucking people to, oh, look, 23 hours ago. What do you think their video is? Do you think it's a bullish video or a bearish video with a scary thumbnail to get people enticed? Well, take a look. Let me pull this up, make it a little bit bigger. It started. Oh, no, it just popped the bubble. Well, I did say that, so. It started. The stage is set. It's happening. History is repeating. Let's go to their page. It started. History is repeating. This time is different. Bitcoin is about to do the unthinkable. The bubble just popped. Bitcoin is about to do the unthinkable. This changed everything for 2025. The stock market is crashing. Emergency update. 70 years of data shows us this doesn't end well. It's happening again. 3 months more until it begins. Brace yourself. This won't end well. It happened again. Warren Buffett is never wrong. Warren Buffett was hoarding cash. The damage is becoming irreparable, etc., etc. It's terrible. And it goes on for ages. Look at this. Look at this. Look at this. It goes on forever. Forever. This is a year ago. It's crazy. And every video, if you watch, he'll talk about how bearish he is, and at the last moment, he'll say, "Oh, I'm actually bullish. We've made money with our members. If you become part of our membership, we've actually given you insight into where you should buy to actually make money." So he does all this bearish stuff to get people in and scared and watch the video, and then he'll do this last minute, like, actually, we're still bullish. We're pushing back when the recession's going to happen. And that way he gets a bunch of members, and he is playing both sides of the coin, and I find it rather detestable. Thank you very much. What are your thoughts on the boys at Option Drops? I have no idea who those are. The Boys is a pretty good show. Anxiety and fear at its finest. It's just feeding off. Like, it's just message retracted. I don't know if people are deleting messages or if they're saying bad things and like the feed is like killing it. But yeah, it's just feeding off of people's fear and to gain members to make money. And like sometimes it makes sense. Like sometimes you got to say the market's crashing, right? Sometimes it is crashing. But when you say the market's going to crash like over and over for over a year straight, like, come on. How do people not look at that track record and go, that was stupid. You know, this doesn't seem like a reliable source. But like, how many subscribers does he have? Let me check really quick. He has 452. We have the same amount of subscribers. Look at that. What did AuntiePC say? Here's my theory on why the market will go down this time when Jay Powell speaks. Because Trump has recently demanded that he lowers rates, and you know he's not going to. And Jay Powell will remain independent and data-driven, which I agree with. And you know the press conference will be nothing but the divisive questions about President Trump's rate cut demands agreed and his new policies from those asinine reporters. Honestly, couldn't have put it better myself, AuntiePC. That's pretty much spot on. Wish me luck, David Davidson. Nice name. I'm mirroring Nancy Pelosi's January trades with leaps. Do you think that's a good enough DD? Sure. If you know how to manage leaps. If you know how to manage leaps, there is a particular way to manage them. And maybe I'll share that video with you. I'll share it. This is for my Patreon members. Let's see if I can find it. How to manage the leaps. Here we go. So this is kind of an exclusive video, but I'm going to share it with you guys because it is important when you guys are trading leap options to not over allocate and to know how to manage it. So here it is in the chat. Thoughts on VIX exposure in the portfolio? Only if you expect. I tried to put that into my autopilot, into my panic button autopilot, so that you could. It's just restricted for some reason. I guess they had legality issues, but it's great for short-term drops. Like if you did the VIX back, what was it, last month? You know, it has to be aggressive drops that increase volatility. So all right, here's the VIX. What was this? December. This is when the market basically crashed around the suddenly hawkish stance of the Federal Open Market Committee and Jerome Powell, and you have this huge spike, and the spikes are generally quite significant. So if you buy cheap out of the money call options, this is the only case I'd advise buying out of the money call options, because it's basically all or nothing, because you're going to lose your money or you're going to make a ton. But like if I do an info line from here to here, that's up 111%. So call options can make a lot of money if you buy them at the right time, right? And there used to be an inverse VIX ETF until this happened. No, not this. Until this happened in 2018, and the fund went down 99% and got completely liquidated. And now I don't think there's any inverse VIX ETFs, because that would be easy money. It goes up, buy the an inverse VIX, watch it go down. Goes up, buy the inverse VIX, watch it go down. Buys it, It's not like, is it banned? I don't know. Must be banned or something, because it's like this would be the easiest money on the planet. No, I don't watch that person. Clever name TBD says, I love that I bought a leap, then the underlying tanked right after it got filled due to an offering, and then the Nvidia thing too, Lamau. Yeah, dude, and leaps will always initially eat like shit. You'll lose 20, 30, 40%. But over the long run, it's just because they're leveraged. That's just how leaps work. They're leveraged. So you're gonna take huge losses at first. But the hope is that over time it'll rebound and you'll very quickly go from negatives to positives. Not always the case, depending on the underlying, of course, and the time frame. But yeah. Thanks, bro. I like streaming. It's fun. It's more engaging for me. What time is it? We're almost due for the press conference. I'm going to leave it at that for now. And let me set up my timer here because they take a little bit of time to get set up. So it's in, what time is it? We'll set it for 7 minutes. And I will see you guys in 7 minutes. Does that sound good? And we'll watch it and see how he's doing. We'll see Powell here in 7 minutes at his Fed press conference. Nvidia about to moon by close. We'll see. Have you gone to dog park yet? I'm not allowed to bring my puppy because she's not fully vaccinated. Can't even bring her on walks. So I have to wait another 8 weeks before. But I brought her to like my therapy session. That was fun. And I bring her around wherever I go so that she gets exposure to stuff. Anyway. All right. I'll catch you guys here in 7 minutes. So it always takes them a minute to get started. Oh shit, we're here. Hold on. God damn it. Am I right? Am I here? Hello? Did I make it? Don't make me switch to CNN. All right, here we go. Can I make it like theater mode? What does that do? Makes it like slightly larger. I wanted to keep my portfolio up so you can see my portfolio, how it's doing on the right side. In the middle, we have the Qs. And on the left, of course, we have Jerome Powell. Let me know if it's too loud or too quiet. He says that every time. Louder. Got it. Got it. Got it. Got it.
Market committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%. Bolstered by resilient consumer spending.
I'm stupid.
Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong.
He didn't say anything important
Overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months.
Okay.
Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
He started with a deep sigh.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate.
We will continue to blah, blah, blah.
Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak.
Moderate.
That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance.
They're in the wait-and-see mode.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
It's already been announced.
At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
He's not going to say anything about political stuff
As we
yet.
previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here comes Trump. When's the next cut, et cetera?
Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately.
Yes.
So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy?
He's going to say nothing. He's going to say it doesn't affect him at all, of course.
3 questions. I'm seeing it really as 1 question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicating his demand?
That's such a weak answer.
I've had no contact.
He doesn't want anything to do with Trump or whatever. He's like, I'm data-driven. Please shut up.
Roast, The Wall Street Journal.
When's the next
Chair
cut?
Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider.
I think the market's just happy that
If I could follow
he's
up,
not being super
does the
hawkish
economy
right
here
now.
warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market.
He's literally going to walk
achieve
off.
that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Honestly, I feel like I could be saying what he's saying.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
Well, it
No,
hasn't.
So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Volumes all the way up.
I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know.
That's what I said earlier.
What will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully.
I'll give a recap.
And as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
David, I can't change the volume. Are you talking about my mic or the video? Because I can't change the video volume. It's all
you and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in?
That's a good question.
If that's not true, can you lay out what you think
he's going to say
it's data dependent in the economy, how you see it developing?
He's going to say data dependent.
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passed, and we should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold waiting to see what comes down. It's a very large economy, and policies affected at the margin, but we're going to wait and see.
Wait and see.
Follow up
Data
the
dependent.
idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut,
dependent.
or
Data
data that
dependent.
will tell you should hold?
Both.
We're looking, it's more the way it works is we are looking at the data to guide us in what we should do.
It's both.
And, that's what we do. And
He's beating
right
around the bush
now,
a
we
little
feel like we're in a very good place. Policy's well positioned. The economy's in
beating around the
quite a
bush. He
good
doesn't
place,
want to say
actually,
which way.
as well.
Either way.
And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
See, he said, all right. He's cranky. He's mad. They're fighting a little bit.
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
They won't completely.
As I've said
They have to
countless
respond.
times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks. And we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's,
He's
lots
literally
of
getting
research
pissy
shows
because these questions are so
that's the
dumb.
best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
They haven't.
So one of the things that our staff does is they look at a range of possible
maybe they
outcomes.
have.
and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see they're alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is how broad, and not just
very
now,
helpful
but always.
if you're just going to have
And
broad.
it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. but you don't act until you see much more than we see now.
Katerina.
Hi, Jeff.
Katerina Saraiva, Bloomberg News.
I have a dumb question for you.
Last month you talked about a future rate cut as
When
being
could those
pretty,
be?
Significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
I don't even know what you said.
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good, but if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half year.
We reviewed that earlier. We'll review that again.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
But not core
Chris, I'm
PCI.
not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing
sick
from
of
the
this
network
shit.
for greening the financial system, even as even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. You think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates, and
Is the
belong to
NGFS, is
we
that
have
just
no criticism
like-
of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for
Yeah,
consumers.
okay, it's just like a network of central banks communicating with each other.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well.
Surprised no one's directly asked about.
That's what we think.
when the
I would
next
say we're
rate cut
meaningfully
would
above
be.
it. I am.
I wonder if that's coming up.
I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned,
I'll recap that.
to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
She looks mad.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around.
Good summary.
But then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around?
Dude.
And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada.
That's exactly what I
today.
said they were going to talk and ask questions about.
What sort of information would the Fed need to see on tariffs
I really don't
before
think he's
it
going
was
to be happy
willing to
with this question.
take such a preemptive move? Thank you.
Sorry,
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
So first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, you know, the kind of footprint of trade has changed a lot as trade is now spread around. You know, it's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know.
It's much smaller
and we didn't know, by the way, in 2000 and I guess 18. Yeah, we didn't really know. And you know, again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going.
Speaking of me killing it, go to the description, sign up for Autopilot, track my trades. All right, read the stuff in the description. Go.
Going to transmit through the economy to consumers. That really does remain to be seen. You know, there are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And you know, the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
I'll answer your question.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that the rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward,
Well, if you think
do
about
you
it,
think,
in the
are you
past
confident that activity will
little over
remain
2
stable
years,
given
I've
how
made
elevated mortgage rates
174%.
are? How does it fit into your broader thinking about the economy?
So, as you know,
Go
as
back in
we've
time,
reduced
maxing
our
contributions
policy
out,
rate 100 basis points,
getting good
longer rates
returns,
have gone up,
gets you to where I'm at.
not because of expectations,
That's
not
why you should
principally
join
because of
Autopilot in the
expectations
description.
about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing.
And it's
so,
11 years. 11 years.
I don't think, I think these higher rates are going to, they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
The consensus is interest rates are staying
on tariffs,
stable.
Curious whether the threat of tariffs and not
They're in a
knowing whether they
wait-and-see
could
approach.
stick or not creates uncertainty for business here in the United States and could
And
cause
he's
them to
not
pull
making
back,
any
ultimately weighing
assessment
on
on
growth.
policies.
Does the threat of tariffs cause you to ponder your growth forecast?
Take place.
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
Stock market's at an all-time high, so it's kind of hard to
We look from a financial stability perspective at
project
asset
to
prices
crash.
generally, along with things
And then
like
make adjustment to
leverage
policy.
in the household sector,
Because of
leverage in
it.
the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So Overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take?
How to manage them and don't overallocate.
What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong, but. So the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table?
There it is.
And
Finally, someone asks.
Are you looking to see better than expected data on inflation to cut?
Finally,
or are you looking for inflation data that roughly aligns with current forecasts?
So, as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Hinting at no rate cut in March.
whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts?
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said what we said was that at times when inflation persistently undershot 2%. We would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment.
Not bad.
Inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
Thank God.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're
above
so
their
new,
2%
and
goal, but
we don't want to make the
that's a
mistake.
lot of progress.
If you're making a choice to conduct that
And
activity
there are some areas
inside
within
a bank, which is
Core
inside the
PC
federal
that were
safety net
good readings.
with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in asset plans?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
All right, thank God. Woo! All right, where does that leave us? So you can see, actually I'll pull up the screen still. You can see the market's relatively kind of where it was at to start with. And that's because we don't really have any surprises, right? If I pull up the CME group estimate for interest rates, you can see today was 99.5%. Of course, we stayed, for those of you who are just catching up, we stayed at the 425 to 450 basis point interest rate level. And for March, for the next meeting, you can see that there's a high chance that it's going to stay at the same level again. And he hinted multiple times about how he wants to, there's no hurry to change anything. Because if we look at kind of our macroeconomic environment here, you can see that CPI, while it's had a little bit of an increase, I think he mentioned that there are some parts of CPI, core CPI, that were some good readings. You can see that it's been relatively stable since July. Both have been relatively stable since July, and so he's saying both sides, hello Harim, both sides are of their dual mandate, maintaining high levels of employment or low levels of unemployment and stable prices are relatively in balance, and so they have the ability to wait and see and keep their interest rates at a level that is moderately restrictive enough to keep more pressure down on inflation, on core CPI, to push it back down to the goal rate of 2.2% in the long run. Meanwhile, he did say that if there was any, if the unemployment levels were to rise, they would of course consider lowering rates. But right now, where the unemployment level is at is relatively low historically. I mean, if I could zoom out more, let's see if I can do like monthly. This is 1999, right? It's relatively low historically, right? So he's in no rush to make any changes because these two things have been relatively stable. And of course, it's only been a month since their last meeting. What was the price you wanted to buy Nvidia at? $100. I was listening in the car earlier, but he pointed to a graph and didn't say that the price. I didn't. You're right, chessmate. You checkmated me. I was looking at $100 probably. Would be where I would like to buy in, and then I would expect it to keep going down and keep buying as it goes down. So that was a lot of a fluff, I'm not going to lie. A lot of conversation about what Trump's policies are how it's going to affect their policies going forward, and he kept saying, like, we have a very narrow goal of keeping unemployment low and inflation at 2%, and we're going to keep focused on that, etc. It was kind of repeating the same things over and over. And you can see on the right here, you can see my portfolio is going up. If you want to track my portfolio, you can link your brokerage and do the same trades I do, except options, unfortunately, but I try to mimic it in the portfolio. You can join via Autopilot down below. It is cheaper than probably most expense ratios out there. So I highly encourage you to do that. Here's my all-time performance since November of 2022. Of course, it's been better since before that because I started with nothing at 18 and kept depositing, maxing it out. And you can see at November 2022 is at 123,000. This is at the bottom, basically the bottom of the 2022 bear market. So it was, I ate a lot of shit on the way down. But before the 22 bear market, I was below $100,000. So I've made a lot of progress over the last 2 years to get up to $342,000. And I foresee myself continuing to make that progress. Of course, if there are any dips, I will adjust my strategies. And I'm always keeping my pulse on the markets, of course, and looking for good buying opportunities. Value investing has become more difficult as retail traders have entered the market more aggressively, especially in the last decade. So we're keeping interest rates at the same place now. And is it possible to have margin on a Roth IRA? Not with Robinhood. And since I only use Robinhood, I'm not exactly sure. So I'm going to look it up. I think you can. It depends on the brokerage. You can use limited margin. That's what it is. Limited margin. I forgot about that. Limited margin basically, at least for Robinhood, allows you to deposit funds instantly. So they put, thank you, Typhoon again. Limited margin just allows you to deposit funds so that they appear instantly and they put up the cash for you. Why did I choose Robinhood for my Roth IRA? Because of their Roth IRA bonuses and because it's a platform that is really easy to teach from. It's really easy to see the options chain. It's easy to see the graph. It's easy to see my stocks. It's all that. When I pull up Thinkorswim, like beginners, their minds just fucking explode. So it's just not a great platform to teach from. If I were to pick anything as my go-to platform, I would probably go with Thinkorswim, but I am a little bit of a slut for the UI of Robinhood. But Thinkorswim has everything you could possibly need to do anything. So it looks complex, but it's really not that complex. But you can watch my tutorials on Thinkorswim, which is now under Charles Schwab. And if you are in Thinkorswim or Robinhood or Webull, you can link to Autopilot using the link in the description below. I'm going to keep pushing that because it just launched today, and I'm super excited about it because you guys can follow my trades without doing anything. Your portfolio will do trades as I do my trades. It's awesome. I tried Moomoo. So yeah, Moomoo's a Chinese-based company or brokerage, and they just get people by offering free stocks, just like Webull does. Every time I open Webull, it asks me to invite new people. I can't imagine trying to day trade or do anything on Webull because every time you open it, it asks you to invite new people. Robinhood is the best options chain, hands down. I almost slightly disagree. I think Thinkorswim actually has a little bit of a better options chain because you can see everything very plainly. I guess it's like the simplest options chain, but I want to see delta and theta and vega and all that stuff. And when you're on your phone, you can't really see all that super easily. You can't compare different options deltas at the same time, but you can on the Robinhood Legend platform. What you're saying, if you sign up for this link, it will auto do what you are doing? Yes, that is what I'm saying. Exactly. If you, in the description below, if you download the app, I'll show you. I'll show you right now. We'll mirror my phone again. It's really, really freaking cool. I'm really excited about it. Let me mirror my phone. Those of you about to leave, just stay for 1 second because it's super, super cool. Okay. So here I am with my phone, right? It's top left is Autopilot. You can go to the App Store, or you can use the link below and download Autopilot. What you do, you tap on it, right? It has different people. Well, it'll show initially. It's going to show this, it'll show these portfolios. So it highlights some portfolios. But if you click if you tap the top 3 bars there in the top right, if you can see them, it might be kind of bright, so you might not be able to see it on the monitor. But if you tap that, you can go to pilots, and there's different people on there. But look, there's me. There's me, baby. I'm on there. I'm not sure if it's. I don't think it's only on iPhone. Unless you're telling me that. Let's see. About Thinkorswim, yes, that's awesome. And if you have a wallet to follow yours, but with less money, yeah, it copies percent-wise. It doesn't. It's percent allocation. You don't need $330,000. Yeah, it's on Android. It's on the iPhone App Store. It does it by percentage basis, and you don't have to allocate your whole portfolio. So you don't have to. Like, you can still do your own options thing, right? You don't have to do everything I'm doing, but you can allocate a portion of your portfolio to what I'm doing. Yeah, there's a Nancy Pelosi ETF, but if you tap on me, there's 3 different ones. There's actively managed, which reflects my Robinhood portfolio as best as possible. It doesn't include options, but I do, in some sense, kind of replicate that because I do have a forward option, a call option that's open, so I have a forward position open. It's a swing trade. And then there's the Magnificent 7, of course, which changes based on how the performance of the top 7 stocks are in the S&P 500, and I will adjust that as necessary. And then there's the panic button, which puts you into being short on inverse the SPY and inverse triple inverse the SQQQ, and then BND was 1% because I had to add a third one. Otherwise, I wouldn't have added a third one. I would have added a long VIX, but they restricted me from doing that. But anyways, if you tap on actively manage and you select actively manage at the bottom, it'll link your brokerage. It won't take any of your information. I bought some Bitcoin. I don't trade it, but I bought some recently. Just because. If you select actively manage, it'll connect your brokerage to their platform via an API. It won't take any of your data. You don't have to sign up for a new brokerage account or anything like that. It'll connect the two through an API. And whatever I do on my portfolio, I will adjust through their portal percentage-wise how it changed, and it will reflect in your portfolio. Those trades will actually take place. Has Adam given his thoughts on Trump foolishly wanting to lower rates? Yeah, Trump wants to, I said earlier, Trump wants to lower rates, Carson, because it's going to make him look good, because it's going to stimulate the stock market. It's going to stimulate it's going to make money easier to have in hand and spend, and et cetera. But in the longer run, shorter, medium, longer run, it's going to be bad because it's going to have an upward pressure on inflation. I don't think Jerome Powell is at all going to feel pressured by Donald Trump to lower interest rates, because it'll derail everything he's worked so hard to accomplish over the past 4 years. So it would be a nightmare for that to happen. So I don't think that's going to happen. But please sign up down below. It works with Thinkorswim, so Charles Schwab, Robinhood, Webull, I think one other one I'm forgetting, and then they're working on implementing Tasty Trade, and they're working on, and because it's percentage based, does it buy fractional shares? If your brokerage allows buying fractional shares, it should buy fractional shares, as far as I'm aware. So for Robinhood, since you can buy fractional shares, it should buy fractional shares, as far as I know. Again, I just launched today, so there are some things I need to get used to. But as far as I know, it should buy fractional shares. We have some serious ER going on after hours today, for real. Fidelity. Fidelity was the other one. Yes, Fidelity. What am I getting out of this? That's an excellent question. I'm getting out of this money, of course. What else would I be getting out of this? So it's cheaper than what I do. I typically do Patreon for people following my trades, and I'm actually losing money by pushing people this direction because Patreon people pay me more money. But I find this way cooler, and it's way more streamlined for people, and it's just a better user experience for you guys. What I get out of it is you pay $99 per quarter. $99 per quarter. So that's what? $33 a month. And then if you want to get a discount, you can do $290 per year, and it'll actively trade whatever I do, which is super cool. But that's cheaper than my Patreon. My Patreon right now is $49.99, and I closed off my Patreon for a bit and moved over to WAP, which was $99.99 to follow everything. And so now you're paying $99 for 3 months instead of $99 for 1 month, and it happens automatically for you. So there's no reason not to sign up for this, guys. I'm begging you. IBKR is something they're working on. They're working on it for international customers, but it is not implemented yet. But as soon as it happens, it is something that I will share with you guys and let you know that they have implemented it for international consumers and IBKR. Does Euro broker from Germany? No. So for right now, international brokerages, not happening yet. But it is on their to-do list. Like if you go and try to sign up, it'll say what brokerages are allowed, the ones they're looking to add, like Tasty Trade, and then it says that they're working on implementing for international brokerages. It's just technically a little bit more complex for them, so it takes some extra time. Roaring Titty, what is up? Did you stream just for today's news, or do you stream often? I streamed earlier today for my Patreon members and stuff to tell them about Autopilot, because I want them to move from Patreon to Autopilot if they're just interested in following trades, because it does the trades for them. And then I did a stream on my birthday, and I talked about finances and answered questions and stuff like that. And this is something I plan on doing more frequently because yeah, I'm sorry, the app's not enabled in the EU. You always sign up for my Patreon and see my stuff there, because I'll keep that going. But you can always stand by, because it'll launch in abroad eventually. But I'm starting to stream more often because it's I had encephalitis, right, and it's become difficult for me to organize videos and implement them. It's just become harder. It's much easier for me to set up a camera and start streaming. So I'm doing a lot more streams, and I might actually set up a schedule so people can find out when I'm streaming and like actually, on a predictable basis, know when I'm going to be online. I know you trade options. Do you also trade futures? I said earlier I've traded futures in the past. They're just too leveraged, and if I were to hold them instead of like leap options, I would have to keep money ready to meet those margin calls, because you get margin called quite frequently. But as of right now, I don't. But as my portfolio grows, I'm not sure. I believe you can only do futures, and like you can't do it in a Roth. So as far as I know. So I'll have to build up my portfolio first. But for small accounts, it's just incredibly risky to trade futures because they're very leveraged. You want to do the small, the micro, the mini futures. You don't want to do the big ones like /ES or /NQ, because you will get demolished. The mini futures are like $12.50 per tick. Literally, it ticks up. You make $12.50, as compared to like, I don't know, $25 or $50, whatever, for the main NQ or ES. It'll go up like $25 or $50, or maybe more. I forget. You have to check with the CME Group website. You can find everything that's available on there. They'll show the general margin requirements. It varies by brokerage, and then they'll show what the contract is, and the contract size, and the notional value, and blah, blah, blah. But anyway, I'll be making a tutorial or do a live stream covering futures here shortly, because Robinhood is starting to roll out futures. And as soon as I get it, I need to make a tutorial of some sort to save people from themselves. What do you expect of Tesla today? I don't expect anything of anything today. The market's traded sideways. Let's see how it's doing still. I mean, if you look at it right now, these are the Qs, right? It's just kind of where it was at open, a little bit down from open. There's nothing dramatic going on today. Like there's nothing from Tesla that I really expect to happen. It's doing the same thing. Like on any individual day, I don't expect anything crazy to happen unless sudden news comes out, or if there's an earnings report, right? Because that earnings report is going to give, number one, their earnings, and also their whatever it's called, their outlook for the future of their company. And of course, that's going to have more extreme moves. But for any given day, unless there's a surprise, I don't have any anticipation of what's going to go on exactly. I did expect, though, with Nvidia, sometimes I'll speculate in my head, but I don't really take action. I like buying dips versus like buying puts. But I did expect this, what I would call a dead cat bounce, and I'm really hoping it drops down to like the $100 price level. That would be an awesome time for me to buy it in. Thanks, Tony Bella. Is your return only 3% because you were just added? Yes, I was just added like today. So it's literally since yesterday, my return is 3% on Autopilot. If you wanted, again, if you wanted to see my portfolio, I'll show it one more time for all the people who are new here to show you I'm not a complete idiot when it comes to investing and trading. Here's my return over the past, well, this is from November of 2022 and all the way, so a little bit over 2 years, I've made 175% return after adding $1,000. So it's actually, I need to double down and add for last year and this year to contribute to my Roth, which will shrink my percentage return. But that $1,000 has shrunk it a little bit. So it's more like 176 or 177 over the past little bit over 2 years. So that's how I've been able to get up to $340,000 is because I've had exceptional returns. Now, of course, I can have exceptional downturns. I had an exceptional downturn in 2022, but I was just think or swim, so I can't show you anymore. They moved over to Charles Schwab, but I had a huge downturn in 2022. But that's because my investing style is rather aggressive. Like, how many stocks am I holding? Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks, and then some leap options in the wheel. Like, that would be considered pretty aggressive, right? So I'm going to have big downturns, but over the long run, since I'm so young, I can take these risks and get higher returns because I have all the time in the world. If I bought at the top of the dot-com bubble, but I was 20 and just held, I would make a ton of money, to retirement. So when you have such a long time horizon, you can add extra risks. That's why when you approach retirement, people are like, you need to start allocating more into bonds because you don't have time to make up for those big drops. If there's a big drop, you don't have time for it to recoup because you need to retire in the next couple of years. So as you get older, you start adding more stocks. You maybe start allocating to bonds or bond ETFs. But the thing is, shitters, I had a good point that I was going to say, but I just blanked on it. Is that the more stocks you add, the less risk you have, right? Because you're diversifying. That's the definition of diversifying. But it has an asymptote. Gary Kim, thank you for the $10. Holy shit. Thank you so much. I appreciate that. Thank you so much for the $10. That's based off the last 2 years of me trading, yes. Thank you for the $10. I really appreciate that. It helps me. It makes me love doing this is when people do stuff like that. I appreciate you so much. Thank you, Gary Kim. But as you add stocks, once you approach, the more stocks you add, risk goes down, right? But then it starts tapering off. It hits an asymptote, right? Where it goes closer to zero or the risk-free rate. But it starts tapering off slower and slower. So initially, you have one stock, you have high risk. You have two stocks, it drops significantly. But then 3, 4, 5, 6, 7, and it starts kind of tapering off. And by 20 stocks, you basically have, if you're diversified through different sectors, you basically have the risk of the entire stock market. So don't go adding more than 20 stocks. So that's why people say VTI and chill, which is the total market index, which is basically the whole stock market. You're not going to make great returns. If I look up VTI here on Robinhood, I'll show you here in a second. Okay, they actually made decent returns for the past year, 23%. Past 5 years, 81% max all time. So let's say from the 2008 till now. Well, I guess VTI isn't the worst. But you make higher returns by being more aggressive. And VTI is just adding all the stocks. And it's you don't have to add all of the stocks to be diversified to reduce your risk. Roaring Titty, I'm diversified. I have 2 stocks. You decrease your risk by 50%. So congratulations. Have you tried Tasty Trade? Yes, it's been quite a while since I've tried Tasty Trade. Oh my God. Thank you, dude. I love you. Who is it? Undercover Slytherin. Thanks for the $9.99. Dear Lord, may my puts print today. Amen. God bless you. I'll pray for your puts after this. Thank you so much. Thank you, Undercover Slytherin. Where am I? Covered calls keep capping my gains. I don't do covered calls. I do the wheel where I sell covered calls. So that's a whole different thing. I don't do covered calls on my stock positions or on my leap positions for that exact same reason, because it caps your gains. It limits your upside, and it's always going to hit that eventually, and then you're going to miss out on these huge returns. Sorry, I'm sweating like crazy. But I don't do that anymore. I'd rather it dip and I just buy the dip with a new leap option or buy more stocks or whatever and do it that way than to cap my gains. So I don't sell covered calls outside of the wheel option. Seems like you would need more than 500 minimum to overcome the 99 quarter fee. Probably. Yeah, I would say probably. I mean, there's going to be like a tail end of people who have really small brokerage accounts. Well, I don't know. Let me do some math here. So if you have $500, okay, 33 divided by $500, would it be, I'd have to get a 6% return per month. So yeah, basically a $500 account would probably be too small, to be realistic. So yeah, there's going to be like, there's a lot of people who have a lot of money who would pay a shitload of money to follow my trades. And there's going to be those tail end people who have $100, $200, or it just doesn't make sense. If you have $1,000, maybe it makes sense. That it makes more sense. But when you have like 100, 200, 300, 500, like it doesn't make sense. The pricing doesn't make sense. So, but for most people who are $1,000 or above, it makes perfect sense to do so. Let's see. VT Stacks was a winner. Yeah. I mean, I'm not totally against it. Like, I get the idea of like VTI and chill, where it's like you don't have to worry about anything. You don't have to like analyze stocks, read their 10 Qs, look at the fundamentals, worry about if it's overbought or oversold or whatever. You just get to buy VTI over and over with your paycheck, and you just get to watch it go up over time. I get that. It's like you don't have a lot of stress. But in my opinion, like, why not do that with like QQQ or QQQM or SPY or VOO or VTI, which are the Vanguard variations of QQQ and SPY with lower expense ratios. They're plenty diversified. You don't need the total market, in my opinion. Do you have anything invested in yield max funds? No, I do not. VTI and Chill Gang, it's pretty much just VOO with a tiny amount of small caps. Well, is it? Okay. Maybe I am overestimating how much is in VTI. I don't have balls big enough for leaps. That's fine. Again, I said in a live stream yesterday, if you have to find where your risk tolerance is, and you only find that by engaging in the markets. And if you find that the leaps are just outside of your risk tolerance, don't do leaps. That's totally fine. I find that they're within my risk tolerance when I allocate a small percentage to them. But if they're not for you, they're not for you. You can do something like the wheel. Like the wheel's like, I mean, come on. It's like less risky than holding it. It's less risky than holding stocks, because if the stock goes down, you're still selling covered calls. So you're making money off of the stock still. So it's actually less risky than owning a stock outright if you're going to buy 100 shares of that stock. So there's always stuff like that. So don't be, the invest hard. Don't feel bad if you don't want to do leaps. Do you think it was overall positive, negative, sideways overall for the year? I mean, it was very positive for the year. I think we are in a little bit of a shaky environment as far as, I think we showed that when DeepSeek was released, and it showed that the Magnificent Seven really was driven by this AI hype, and Jerome Powell even mentioned that, and it kind of shook the whole market because the Magnificent Seven went down, Nvidia went down 16%. So it's like, how much of this is propped up on AI hype, essentially? What do I think about the Tasty Trade platform? I'm sorry, I didn't finish that. I liked it back in the day, and I'm sure they made tons of improvements. It's been years since I've looked at it. In fact, I do want to look at it again because it's been so long. It was totally fine back in the day. I think they have higher fees for options trading, but they are very options focused, so they have the benefit of that. You can manage strikes very easily, you can roll easily, and all that jazz. They were the people who actually developed Thinkorswim, so I have nothing against Tasty Trade, and I want to take a look and see what they've built out. With 1 year, Adam says, with 1 year expiration, trading options took a few years off to focus on real estate, went back into trading. Would you recommend getting back into options or looking into futures/indices trading? Depends on your portfolio size. If you have a really, really large portfolio, you could definitely dabble in futures for sure. If it's a little bit smaller, I do options, longer dated options, right, like leaps or whatever. And you can do indices that are going to be pretty liquid and are cash settled, so you don't have to worry about assignment. And they might be more expensive, so you might do like debit spreads or credit spreads, but you can do that. But as far as futures go, I would do it if you have a very large account. I'm falling behind on the chat here. I know I want AMD to go up too. Trust me. I'm new here for trading and found your channel. Which video will you recommend to start? I recommend the Webull options tutorial. It is my proudest video, my proudest accomplishment. That and maybe my technical analysis videos. But it says it's for Webull, but it's for any brokerage. So you might skip kind of the intro bit because it talks about Webull, but it applies to all brokerages and covers options amazingly well, if I do say so myself. So that's what I would start with. And then just browse around. I have a playlist called Start Here. So it kind of starts at the beginning, what is it? What are the Greeks? What is it? Why do people lose money trading options? I'm an options focused guy, although I've made, most of my returns on stock investments. Can I ask Roaring Titty, can I ask a question about covered calls? If you sold a call that goes in the money, but the expiration is far out, how likely soon would you get assigned? It depends. If there's an upcoming dividend that's greater than the extrinsic value of the option, the person will exercise. You will be assigned early because of that dividend. Because when they exercise, they give up extrinsic value, but they get that dividend that's bigger than the extrinsic value, so they'll exercise early, you get assigned early. So there's that, or if liquidity dries up, or if someone just stupidly exercises their call option. But really, it's dividend risk and liquidity that are the main things that would cause someone to exercise and cause you to be assigned early. I do still have those AMD leaps. They are not I have one leap. It's not performing great, but I have AMD stock. So I'm ready I have plenty of time. I'm going to wait until 3 months till expiration. And if it's losing, I'll sell that leap option. I'll sell some AMD stock because it's going to be down as well. I'll pile it in to leverage myself again. And I'll push that expiration way out and that strike down again to about 0.75, 0.85 delta. And I'll let her run again. And I'll do that once or twice, but you can't keep doing it forever because eventually you'll just keep feeding this fire when it's raining outside and you'll burn your account by trying to get one leap to work. And again, I posted a video up in the feed about managing leap options. S. Hopper, wanted to thank you for doing your videos. Because of you, I got on Robinhood back in June 2020 and wish you did more YouTube videos as I've watched all of them. Hope you get better. I know I've always not been the best about being consistent about YouTube videos, but I think they're pretty good quality. But I want to do more streams so I can answer people's questions directly and be more engaged with people. Tasty Trade already made a comment on that. I'm not going to repeat myself. Do you have a video about the wheel strategy? Oh, yeah, baby. I have a video about the wheel strategy. Absolutely. Again, for anyone who's new here, if you want to link your brokerage account to mine, basically you can use the link below in the description to sign up for Autopilot. It will essentially copy my trades. I'll make adjustments to their portal as I make adjustments in my portfolio for my actively managed portfolio on Autopilot. And as I do so, it'll automatically make trades in your portfolio. So look at my description, sign up for that. It's a really awesome platform. Here's the tutorial for the wheel strategy, and I have much more. So if you go to YouTube and just do InTheMoney, the wheel, you'll find a bunch of different videos. Would you say most of your gains can come from leaps or purchasing long-term shares? Long-term shares for sure. So leaps are nice because they do give me some extra gains, but the bulk majority of my portfolio is from stocks. So I make the bulk majority of my money from stock options, or stocks, not options. I do reinvest sometimes returns from leaps into stocks, so that could kind of muddle things a little bit because I'm taking returns and adding to stocks, so stocks returns get inflated. But when I'm allocating 5 to 10% to leap options, most of my money is going to be coming from stocks. But I'm going to be taking advantage of that leverage of leap options to leverage my capital to make more money off of a smaller amount of money, right? Reduced buying power, higher leverage, similar to owning 100 shares of stock with a reduced buying power. That's what leaps are, with a little bit of time decay. That's what it is, right? Hey man, love your videos. Braden says, I've learned a ton. Started the wheel strategy after watching you, but wanted to learn more strategies. What do you recommend as the best place to learn about different strategies? So I would do, I'd watch my leaps video, I'd do the wheel video, and then you can watch my videos on like debit spreads and credit spreads, but honestly, or actually the best video for debit spreads, in my opinion, would be the video that called, I'll link it. Hold on. There you go. It's a video called What to Do If You Can't Afford Leaps, and it kind of discusses mainly debit spreads. So as a way to mimic leap options if you don't have enough money, or if you want to maybe not put so much money into the trade. And it's going to be weird in the way that where leaps will make more money as you go up because delta increases. With debit spreads, delta actually decreases as it goes up. So you start making smaller percentage returns and then you hit a cap at a certain point. But it works in the favor on the downside as well because your downside is going to be capped as well and your losses will have the same kind of theme. Man, I just liquidated to buy a house, so I feel like I'm missing out now that you're back. Sorry, dude. But enjoy your house. Sorry about your mortgage rate. I hope you have good credit. Do adjustable rate. What's your opinion on callers? I don't really have a super strong opinion on callers. It's been a long time since I've studied callers. Yeah, I don't have a strong opinion on them. I'd have to go back and go over them again because it's been so long since I've even looked at callers. There's just certain strategies like the jaded lizard or whatever that I studied and tried and just decided I wasn't into it and then just threw it out the window and just forgot about it. And callers is one of those as well. Can I join your Patreon? Yes, I'll continue to post on Patreon. Again, I would encourage you to do Autopilot instead in the description below, but you can join your Patreon. It's open again. I closed it off for a minute, and I got distracted by the next comment. But I still post there, and I'll continue to do so, but it's just so much easier for everybody involved and cheaper to just do Autopilot in the description below. Dude, I just, I did before this video, I'm pitting out. I threw my t-shirt in the dryer, put loads of deodorant on. T-shirt was dry as hell when I first started the stream, and it's antiperspirant. Love the channel. Thanks for all you do. Thanks, Joshua. I appreciate that. And thanks for answering. I appreciate you. Hope everything is going well with your health and keeps getting better. Braden, dude, I'm going off to New York City. Anybody in New York? Who is in New York? I'm going off to New York City. I'm about to do some really, really exciting treatments. They're going to do something called fMRI guided TMS. They're basically going to zip zap my brain a little bit. It's going to help with cognitive function. It's going to help with depression and anxiety. It's going to help with my visual sequelae where it looks like I'm tripping on acid or shrooms all the time, which is really disturbing. It's going to help with post-exertional malaise. It's going to help with a lot of things. And even if it helps a little bit of each, I'll come back a total new man. All right, Undercover Slytherin. If you're in New York, okay, everyone who's in New York, I want you to go to my Discord. I'm gonna make a new Discord right now, and let's see here. New York City meetup. I'm gonna create. Okay, please, anybody can join, but this will be for the people who want to meet up in New York while I'm there. I'll be there the entire month of February, and we could always potentially meet up at the Bowl. I'll be in the Upper East Side of Manhattan. Oh, I gotta turn off the streamer thing. I'll be in the Upper East Side of Manhattan. And I'm happy to do one day where we kind of all meet up and hang out. And hopefully I'm feeling well and better and up for it. If I'm not, I'll just tell you. But for people who are in New York, let's do it. Meet up and hang out for a bit and talk and whatever. I probably won't give you all my stock picks and stuff, but I'd love to just hang out with some of you guys and because I'll be there for an entire month. Like, I'm going to be away from, and you know what I'm going to be away from my entire month is my puppy, which is going to be sad. I'm going to miss her. And she's going to grow up while I'm gone. Okay, this is the last thing I'm going to say before I depart, and I appreciate all you guys who are watching. The last thing I'm going to say for the last time, I know you guys are sick of hearing it, but I'm going to say, please join Autopilot in the description below. You can link your brokerage account using an API, automatically links it, doesn't take any of your information, and it will do whatever trades I do, it'll happen in your portfolio. I go to their portal, I adjust the percentage, so it's a percentage-wise kind of thing. It's based on percentages. If I trim my Robinhood position 10%, I'll shrink it 10%, and I'll add it to something else, right? And that'll happen automatically in your brokerage account. So it will track my trades real time. And I'll add different portfolios if you want different variety as well. $50! Woo! Let's go! Dude, CM Richardson, 91. Dude, thank you. You are a real OG. Damn, dog. Holy shit. That's what I'm talking about. Adam, you're a real one. Thanks for not being course-selling dirtbag. Even though I've been shilling out all the autopilot in the description. Learn a ton from your vids and glad you're feeling better. Dude, this stuff, doing this streaming stuff is like heaven to me. And I think if I can get personal for a second, yeah, it's literally like, it's like my own hedge fund. I own a hedge fund basically on Autopilot. Get in there. It's like, it's amazing. I got really, really depressed. I started antidepressant, got off it because it just made me more depressed. But it hit a point where I was like, either I just don't be here anymore, and this is all neurological sequelae. It's either like I don't be here anymore, or I do whatever I want to do. And live streaming is something I've always wanted to do, but I've always felt super insecure. And like, what if someone asks a question I don't know? And I was like, but when that happened, it was weird. It's like the depression like helped me in a way because that insecurity just vanished. And I was like, if I don't know an answer to a question, I just want to answer it, right? I'm not just going to say something to say something. If I don't know it, I'm just going to say that I don't know it. And then that just is steering me into live streaming because it's a much more interactive thing than like me sitting here staring at a camera, saying a line, fucking it up, having to go back, re-say the line, fucking it up, having to go back, re-say the line, going in here, editing it, everything, making sure the color is correct and all of that, and making sure I sound coherent, even though that's not actually how I sounded in real life, and then making a nice, pretty video for everybody. You know, it just... Listen, it's for some people, and it was for me before I got sick. It's not for me for after I got sick. I will still make videos from time to time on important things that need to have a video for, but I'm very much behind this live streaming thing. Adam asks, I'm going to keep asking along, what is the treatment you are doing? Is it for TBIs or depression? Both. So it's if you go to ChatGPT, you can ask about it. It's fMRI guided TMS. It's transcranial magnetic stimulation. They use a magnet to stimulate, create an electromagnetic field to stimulate clusters of neurons where there is low activity or hyperactivity, so hyperactivity, to correct for things like depression, anxiety, OCD, PTSD, and then also neurological symptoms like visual sequelae. I don't know about tremors, but people who have symptoms from traumatic brain injuries, you can look it up. There are studies on TMS with people for traumatic brain injuries. Also, glad you're tackling this and being open about it. We all struggle. Did appreciate that. And you guys have always been there for me and my brother, and I genuinely appreciate that a lot. We appreciate you. It'd be real nice to have you stream during the day. Nice having a place to interact during the market day. Okay, yeah, I can do that. As far as my brain will allow me to tolerate it, I can do that. I'll have to set up a schedule. Microsoft minus 4% after hours. Are we after hours already? Already. Let's take a look at what's going on. Let's see. Let's see the earnings, because I forgot what the earnings are. Most anticipated earnings for January 27th. Please let me, excuse me. Why won't it let me open? Okay. It is Wednesday, Microsoft. Okay, here we go. What do we have for Wednesday? ASML, someone brought up earlier. I'm not familiar. Progressive, T-Mobile, ADP, Antiva. Great generic brand manufacturers, Tiva. NASDAQ, who do we care about? We got Tesla, Meta, Microsoft. Those are huge. Let's check them out. Let's check Tesla. Okay, eating shit. It's down 2.51% on the day, and is that minus 1.94% after hours, I think, if I'm reading that correctly. So if we go from like right here to here, holy shit, it's down like 8%. That's not going to look good on my portfolio. Damn it. Okay, so there's Tesla. Let's check out Meta really quick. I love you too, mighty shenanigans. Meta, come on, baby. Okay, it went down but bounced back where we started. Yeah, it's an earnings heavy week, and we're rattled by the DeepSeek thing. The stock market is rattled by the DeepSeek thing. So we got Meta and then Microsoft. Oh, and then Lam Research. Those are people who make equipment for the production of. Oh my god! All right, time to buy the dips, boys. That's what, minus 6%. Woo! Are we entering a bearish market here? Earnings not looking great. Okay, well, I'm overreacting a little bit. It's not, I mean, if you look at that, it's not that big of a deal. But let's see. Tesla will probably miss earnings, but roadmap will make or break. Agreed. Usually does. Holy shit. Did I miss another? No, I didn't. Okay. Just want to make sure. Steam Richardson. Thank you so much for the $50. Thank you. All right, Lam Research, which is LRCX. Yeah. It is. Damn it. This is the one I recommended a leap to my brother for, so he's going to make a ton of money. But I was going to move Adobe into Lam Research. Shitters. I was just kind of slow. Okay, up 6%. All right, so everything's kind of up or down 6-7%. So we'll see. You know, the earnings was just announced, so they're going off earnings, not off of the what's it called? God damn it! The outlook, the forecast, the someone help me with the word. I'm blanking on the word. What else do we have? Lam Research, ServiceNow, Celesta, Wolfspeed, Wolfspeed. Okay, I don't really recognize anything else. Tomorrow we have Apple. What am I looking at? Tomorrow we have Apple, Intel, Visa. Those are big ones. MasterCard, UPS. MasterCard is not going to move a whole lot, whatever. Okay, so those are the big ones. Apple, Intel, Visa, and then today we look at Tesla, Meta, Microsoft. IBM is big, obviously, but Lam Research. And those are the ones I'm really interested in. And I wonder how it's pulling the Qs down after market. Yeah, we'll see if it rebounds. You never know with earnings. A lot of times you see things tank and then they just bounce right back up. I've seen people like just cheering and celebrating that they made a ton of money, and then by the next morning, right back where it started. And all those people who bought put options or whatever, they just got IV crushed to all hell. Guidance. Thank you, Rory Titty. I was like, I couldn't think of the freaking word. Guidance. Guidance. It's all about guidance. What is your process for picking stocks to invest in besides just mega caps? I've watched almost all your videos. I don't think I've seen one on this. Yeah, so I do two main things. One, I do the Peter Lynch style, which he says is the retail investor has an edge based on their experience with the products and services around them. So if a product or service is profitable or about to become profitable, is something I use or would like to use, and is not an obscure penny stock, that is a company I'm interested in investing in. Microsoft, AMD, I have an AMD processor that kicks ass right now. Apple, I use Apple, everyone uses Apple's products, you know. Hood was actually more of a thesis-based one. That was more of a one I have really thought out. I'll link a video to that, actually. On my thought process. This is when I was still sick, so I sound like shit, but... but occasionally,
Okay.
occasionally I have like these grand theses, right? That give me these high returns, like with Robinhood. That was one of the few ones that I did. And then like over sell-offs, when people overreact, that's a great opportunity to buy. Like with CrowdStrike, for example, or with the Match Group back in the day. That was a better swing trade, obviously. Now Match Group is not doing super great. But back in the day when Facebook launched their dating thing, Match Group tanked, and I bought immediately because I was like, that is a huge overreaction. I remember typing on Reddit, it was like 2019 or something. I was typing on Reddit, I was like, this is oversold. Like, just because Facebook threw a dating thing, I mean, who uses Facebook dating? It's terrible. It's so close to like your friends and your family that you feel like they're watching who you're liking and talking to, you know? So I look for companies that are oversold, like CrowdStrike. When it plummeted, and because everybody was using CrowdStrike, well, I was like, well, everyone's using CrowdStrike. They're probably contracted with CrowdStrike. There's going to be friction to get away from CrowdStrike. This is an overreaction. I'm going to buy into it. So those are like the two things I really look for is like, do I use their product or service? Would I like to use their product or service? Are they profitable or about to become profitable? Do I have a grand thesis of why they're a good company and they're undervalued, like with Hood? That happens rarely, but occasionally it does, and it generates generally high returns. That's just called value investing. And then lastly, overcorrections. And then buying the dip on things. It never hurts to throw in, like if you want to throw in QQQ or SPY to your portfolio just to diversify a little bit and just keep the stress off you. It's always okay to do stuff like that. You're never obligated to just do stocks. Again, your risk tolerance is going to have to be calibrated over time as you gain experience, right? 1 year leaps or 2 year leaps? 1.5. Right in the middle. If I can get a 0.85 liquid delta liquid option and a 1.5 year expiration, that's perfect. 2 years for me, it's like you're paying too much in time value. You're locking up a lot of capital and time value. I'd rather just use that capital elsewhere, right? So 1.5 years is kind of my time frame. Okay, so today interest rates held constant, and Jerome Powell got really pissed at that one person. It's so funny. He said "all right" at the end of his sentence, like "all right," you know, like he's pissed. But things are relatively stable, except outside of earnings right now, where things are not doing so great. Outside of Lam Research, let's check Tesla again really quick. It's bounced up a little bit. It's bounced up. Tesla, what do we say, Microsoft or whatever? It's bounced up a little bit. Yeah, we'll see how the guidance holds. But I don't usually listen to earnings calls because, you know, they're little snippets and they give some projections, but you do have to pay attention to overall trends. Like, for example, when I was like, no, I don't set stops for leaps. I let them ride or die since the expirations are so far out. So if I hit 3 months till expiration and it's like almost dead, because I allocated only 5% of my portfolio to any individual leap and 10% to leaps overall, I can always sell that leap option, use that money and grab more money and buy a new leap option. I can sell other stocks and buy a new leap option and recoup that leverage, get that leverage going again, and keep that trade alive. And so I don't set stop losses because you will be stopped out like that because leap options have so much leverage that you'll be down. My AMD leap is down 50%, but my expiration is not until like a year and a half from now. So I would have gotten stopped out, but I have 1.5 years until expiration. So no, I don't touch stop losses. Even in general, I don't touch stop losses because it's like with my forward swing trade, I'm like, okay, so I just throw some in forward, some calls in forward. And I'm like, I'll just throw whatever I'm willing to lose into it and just let it ride. And if it hits 45 days until expiration, I'll probably sell or roll out to keep the trade alive because I don't want that exponential increase in theta to start eating away at the value of the option, right? So that's where I'd put my stop loss is at a certain time, not at a certain stock price. Name the one book or resource that impacted your trading career the most. Actually, it was a class in college. It was a trading class that covered options, futures, and I also took, I majored in finance. I got a BS in finance, so I took a lot of different finance courses and economics courses. But that particular class, like I knew a lot about options and trading specifically, but that class filled a lot of different holes. Book-wise, I've read like books on value investing, The Intelligent Investor and stuff, but like that, I've actually, the most books I've read are textbooks because of college, and the rest I've done learning online. That's just how people learn nowadays. And a lot of those books are old and outdated and don't really apply anymore, in my opinion. So it was that class. Just watch a video on the Poor Man's Covered Call and it was absolute masterclass. Thank you. One question from that. What point do you normally close off the long call position? So I treat it like a leap option, right? So same deal as, it depends how far out you buy that long call position. See, here's the deal. I don't usually do the Poor Man's Covered Call because I like to buy leap options and keep my upside uncapped. When you sell a covered call against it, you're capping your upside because if you go above that strike price, it could get assigned and that long call is your collateral essentially, right? So you're capping your upside. So I don't usually do that. So I'm not super familiar with buying like shorter term options and selling calls against it and then deciding when to sell the call option. But what you typically do if the call option starts rising is you'd roll your short option up and out and strike. Well, I guess you have to keep it the same expiration too. See, I just don't touch Poor Man's Covered Calls, so I'm kind of a little rusty on it. It's been a while. I don't know, set a profit target and take it, I guess. I'll just stop there. Sorry, I don't have a better answer. It's like asking like when do you take profits on a stock? Like for me with call leap options, like there's not a point I take profits except for 3 months until expiration, so I don't start increasing theta. And then I'll sell and I'll take profits naturally, and then I'll buy a new leap option and keep the trade going. Like I hold it like stock, you know. Yes, Tesla missed earnings. Revenue 25.7 billion estimate, 27.2 billion. Earnings per share 73 cents versus 77. Okay. I have an ARM leap that's down 30%, but expiration is a year out. Yeah, that gives you time. What does ARM even look like? Yeah, I mean, you have time, right? That's the benefit of the league. You have time on your side. You just don't want to over-allocate, right? YouTube University is the GOAT. For real, that's where I learned like most of my stuff. And then that trading class really solidified a lot of the gaps I had. And it was actually really unique that they offered that. And they had like a trading competition, and I had access to a Bloomberg terminal, and it was actually really, really cool. Yeah. So I think that'll cover it for today. Seems like most people are leaving, but I do want to say one last time, if you wouldn't mind, join Autopilot down below in the description, please. It is basically me. I'm my own hedge fund or ETF, and you get to buy into me, and you can have those trades happen real time every time I make a trade. How freaking cool is that? Do it. New to your channel, love the content and the attitude and vibe. Hell yeah, bro. Love it. Thank you so much. With that said, guys, it's time for me to say goodbye unless someone has any more questions. Don't mean any distrust, but how does Autopilot make money? They make money through me. So when you join, let's say you pay $99 per quarter, they take 33% of that. If you are on an Autopilot already and then you find me through just being on Autopilot, they take 50% of my revenue. So that's how they make money. They don't do ads, because ads are cancer. They take some of my money, a good chunk of my money, for providing the platform to allow this to happen. YouTube University just means using YouTube as a place to learn. Thanks. I hope all things go well in New York City as well. And anyone who wants to meet up, join the Discord. If you want me to relink it, I can. Asking real quick again, does Autopilot mimic your options traded as well as just stock purchases? So just stock purchases, but for example, I have calls in Ford as a swing trade, and so I have stock to mimic that. So I try to mimic my options as best I can, but I can't totally because options provide such high leverage that I can't allocate over 100% to a portfolio. So I can't, there's just no way to expand. I'm stuck in a 100%. I can't expand more than that. I can't use margin. So, so I'll mimic it to the best of my ability, but like things like the wheel or like things like leap options, like I can't quite do that. But I will take, like, for example, I have like $4,000 in a AMD leap option. I throw that into AMD stock. So I keep it in the same variety or class, for example. All right. Love each and every one of you in a special, unique way. If I were an asshole, I'd throw one more ad at the end of this, but I'm not going to do that. Instead, I say to you in the voice of Hans Landa, I bid you adieu.